As you all know, silver has been leading the decline these past couple of days. Do you still remember how I've said it over and over again? I've said it time and time again. For the past 2 years, I've been on YouTube for a total of 2 years. For these 2 years, I've said it again and again. Gold should be your first choice. Gold should be your first choice. Gold should be your top pick. It's best if you don't diversify your investments. Why? Because you don't have much money. It's just that simple. I've told you stories in all sorts of ways. For example, when you have very little money, you shouldn't try to put your eggs in different baskets like others do, because you only have half an egg, or maybe you just have an eggshell. What are you even diversifying for? Other people have capital of 100 million or 200 million US dollars. They can afford to diversify. To put it bluntly, even the 200,000 renminbi you swipe from your credit card at the bank, what are you diversifying your investments for? You really don't need to diversify your investments. That's why I've always said gold is like Bitcoin. If we were to make an analogy for silver, it would be Ethereum. Haven't I said this before? And I've been telling you this all along. Historically, gold has always moved first, and silver follows. Historically, the gold-silver price ratio before the gold standard, which is from the year 1000 AD to 1783 AD, the gold-silver price ratio was between 1 to 10 and 1 to 15. The gold-silver ratio means 15 taels of gold, or 15 grams of gold, equals 1 gram of silver. 15 grams of silver equals 1 gram of gold. The year 1783 was a turning point in the middle of all this. 1783 marked humanity's first systematic financial crisis. After the European financial crisis in 1783, central banks in various countries returned to the gold standard. So gold suddenly became scarce. So after 1783, the gold-silver ratio became 1 gram of gold to 35 grams of silver. This ratio continued all the way up to before World War II. Before World War II, the price of gold was about $20 per ounce. After World War II, the Bretton Woods system set it at $35 per ounce. In other words, the price of silver should have been $1 per ounce. These are things you should have in your mind as guiding stars. If you don't understand these things, MT5, MT4, I've been emphasizing to you how to unplug the network cable, how to draw lines, how to blow up a satellite chart, how in 2008, Jiang Weiqing's long gold position got wiped out, switch it around. The lesson written in blood is never use leverage. Did you hear that? Never go long using the bank's money? Otherwise, you'll be completely wiped out. You just won't listen, huh? You won't listen. Did you understand the basic data I just talked about? Let me ask you, in 1783, that is before modern finance emerged, and after modern finance emerged, in 1783, what should the gold to silver ratio have been? 1 to 15. Remember, 1 to 15. From 1783 until before World War II, what was it? 1 to 35. Remember that. After World War II, the Bretton Woods system, gold was $35 an ounce and silver was $1. That's a 1 to 35 ratio. That's how it came about. So before World War II, what was the price of gold? $20 per ounce. And it stayed that way for a long time. For many years, it was $20 per ounce. And it kept going up. How much gold was in $1? How much gold was in $1? $1, there was actually gold in a buck. In 1783, which was just after the American Revolutionary War ended, after the founding of the United States, when the US started issuing the dollar, $1 contained 1.505 grams of gold. In other words, there was 1.5 grams of real gold in $1. That's why even today, dollar coins are yellow. It's because there's gold inside. They're not made of copper. You get it? There was 1.5 grams of gold contained inside. This was before World War II. After World War II, they really did become copper. But to commemorate this, they're yellow. It's called a buck. Remember, the dollar isn't called $1, it's called a buck. Why? Because it has a deer head printed on it. A deer head. Buck. B-U-C-K. How much gold is in the Canadian dollar? Canada and the United States have always had an integrated economy. Even before World War II, they were already joined together. So in the Canadian dollar, there was 1.5 grams of gold in 1 Canadian dollar. 1.5 grams of gold. That's why the Canadian dollar is called the loonie, because there's a duck printed on it. It's also yellow. Its size, weight, and purity are almost exactly the same as the US dollar. It's the difference between 99 and 100. One is exactly 1.5 grams for the Canadian dollar, while the US dollar is 1.505 grams. Did you hear that? These are all basic concepts. Basic concepts. Once you know these things, you'll understand how the US dollar started to depreciate. Why was it able to depreciate? Why use it? And you would accept copper and paper. Post Y2, the US emerged as the sole superpower, an order bought with 20 million lives. The post-war order and balance. So what's the situation now? Now there is no order or balance anymore. The order and balance can't be maintained anymore. That's why gold is rising now. The price of gold is rising again. The real reason isn't that everyone is speculating on gold. Stop always talking about speculating on gold. That's just nonsense from the crypto crowd. Do you understand? The real reason, the fundamental reason, is the depreciation of the US dollar. Why is the US dollar depreciating? The fundamental reason is the decline of America's national strength. Why is America's national strength declining? Why is it declining? You might say, Lao Wang, I don't agree. But it doesn't matter if you don't agree, because the US no longer has its allies. Look at the UK, and countries like Canada are drifting further and further away from the US. This is a growing modern trend. I'm not a Trump fan, nor am I anti-Trump. We're just talking about objective facts. America's national strength is indeed. The US economy is thriving. I'll discuss it with him soon and tell you after the main topic. I'll share what I've seen and heard in Los Angeles. The economy there is indeed unbelievably good. But this is exactly how America is supposed to be. After World War II, America was even more prosperous than it is today. Because at that time, the US was the engine of the world. Now, the US can only barely serve as the engine of the Americas. The engine of the Americas, that's all. Of course, that's still quite impressive. It's still much more impressive than Canada. So the US dollar is no longer as strong as it used to be, which has led to the rise in gold prices. What's more, the US now has a powerful adversary, an adversary strong enough to challenge its national strength, and that is China. The Chinese government is stockpiling large amounts of gold. That's why gold prices have risen in the US. And as gold prices go up, let me tell you all again, the rise in gold prices is always... Actually, what I'm saying today is something I've repeated many times before. Gold prices will never just go up in a straight line. The rise in gold prices is always wave-like. Once this major upward trend is established, every drop or sharp decline is actually an opportunity for you to get on board. Do you understand? Because you haven't used leverage and you haven't gone all in, so you can naturally add a bit more each time. So when gold surges suddenly, when it rises like a wall, that's actually when you can sell some. Why is that? Especially when silver is rising like a wall, why can you sell some gold then? Because it means COMEX can't hold on anymore. That is, the old money in London and New York, the old financial families can't hold on anymore. But why do they have to hold on? Because they're market makers. Do you get it? Gold prices have market makers. So does silver. So when they have nothing left to deliver, and you keep pushing them, you'll force them into bankruptcy. You know, COMEX. COMEX is just COMEX. It's called the Commodity Exchange in C. It's the New York Mercantile Exchange in the US, the world's largest precious metals and commodity options and futures trading center. It's the trading center for spot and futures. It's located in New York, but it belongs to the Chicago Mercantile Exchange Group. That's COMEX. So when we often mention COMEX, like when we talk about the international gold price, how many US dollars per ounce? We're talking about COMEX. COMEX, in our minds, COMEX seems so sacred. Sacred like the Shanghai Stock Exchange or the Shenzhen Stock Exchange, as if it's a state-owned institution. But it's not. No. It's not. This is America. This isn't China. It's a private institution. It's a private organization. Standing right behind it are many dedicated individuals, families, old money families from the East Coast, old money families from London. So by nature, they are naturally at odds with these emerging forces in the market. Today's 20% or 30% plunge in silver is really nothing. Let me tell you, it's really nothing. Watch my lips, it's nothing. It's really not. Some people even say it's the biggest in history. You really haven't studied history. A 20%, 30%, or even 50% drop in silver, and you call that history? the history of silver is an 80% drop. You might ask, Old Wang, are you talking about the time of Marco Polo? No, I'm talking about modern times. I'm talking about after I was already born. Silver dropped from 100 to 80, dropped to 20, and from 50 down to 10. Why? Because it's exactly the same situation as today. All the financial experts today, if they don't mention this point, then they don't really understand gold and silver. Why does silver lead the decline? Because unlike gold, silver is an important industrial raw material. There's a huge demand for physical silver. That's why COMEX always stockpiles physical silver year-round. It's really used for physical delivery. And during the last silver bull market last month, the silver accumulated at COMEX in New York with demand for physical delivery. The long positions in silver had already far exceeded COMEX's inventory. Their inventory is in silver ingots. Let me ask you, if you were the boss of the exchange, if you had, let's say you had 5,000 tons, 5,000 tons with that much physical silver, you wouldn't feel insecure. Why? Because in a year, only about 4,800 tons would leave your vault, or 4,500 tons. You'd have a clear idea of your numbers. It's always been like this, but suddenly financial demand appeared. This didn't exist before because it was an industrial product. It used to be just an industrial product. Financial demand was almost negligible. But suddenly, financial demand became the main factor, and it's 10 or even 100 times greater than the demand for the actual commodity. At this point, the 5,000 tons of silver you have on hand, just as an example, it's not exactly 5,000 tons. I'm just giving an example. If there are buy orders for 500,000 tons of silver when you only have 5,000 tons, what would you do? Let me ask you, would you deliver? Can you deliver? Are you able to deliver that much? What would you use to deliver? So they have to use leverage to tempt you in and then force you into liquidation. What if they can't force you into liquidation? If they can't liquidate you, they'll just change the rules. They'll only allow selling, not buying. You might say, Uncle Wang, are you just telling stories? This is the New York Mercantile Exchange we're talking about, the world's largest precious metals commodity exchange. How could they possibly say, starting today, that only selling is allowed, not buying? Did I ever say it would reach $50,000 per ounce? Some idiot is nitpicking here. I'm telling you, that $50,000 per ounce comes with a damn condition, you big idiot. My condition is that I'm the President of the United States. If it drops from 120 to 75, that's impressive. But it could drop from 120 all the way to 30 or even down to 25 because it needs to fall fivefold. Dropping from 120 to 75, that's not even a single fold decrease. Yeah, not even a single fold decrease. Because right now, it's all retail investors in the market. There aren't any big players coming in yet. When the big players do show up and it becomes a life or death battle, a fivefold drop won't be anything unusual. A fivefold drop is nothing special. So what I'm saying is, the possibility of gold rising to 40 or 50,000 comes with conditions. What I said is, if the US can't get rid of its treasury bonds, and I'm the president, I wouldn't even need digital currency to dump US treasuries, because the bulk of the world's gold is in the US. I would just jack up the price of gold, raise it to 40 or 50,000. The US treasury holds 8,000 tons of gold reserves. I'd dump my US treasuries. I'd play it, and there's nothing others could do about it. If you want to sell, go ahead. I'll take it. If you sell, I'll buy. Because you don't have any gold. How are you going to sell? So that's how it hits 40,000. But I'm no US president, so don't mess with me. If that's the case, how high could it go? Just the last 2 days in the members channel, I told them before it dropped. How high should it rise to? That is, before World War II, the normal price ratio between gold and the US GDP. If, theoretically speaking, it should rise to that level. If there had been no interference from the Bretton Woods system, and it had always been a gold standard, it should have risen to that level. According to my calculations, that level is 10,836. This is based on data. There is data to support it. All right, let's continue. Let's continue. If you don't believe it, then just stop watching. Who's forcing you to watch anyway? Aren't you still here to learn something? Come on, with your tiny little portfolio, gold dropped about 10%, right? Silver dropped 20%, maybe 30%. and you just lost it. You just went fucking crazy, huh? Old Wang is an idiot. Bullshit, you're the real idiot. Did you see me panic when it dropped? I've been shouting about buying gold for 2 damn years now. Tell me, on which day did I actually buy it? Let it drop to the day I bought in. If it's got the guts, let it keep dropping, damn it. It's not dropping for shit. Fuck, I doubt it drops once they hit Iran.